will start in just a few minutes, even seconds. Thank you. Excellencies, distinguished guests, welcome again. Actually, we will have a really good topic today at this session, which is fintech, digitalization of money. Even we have been living in digital era, no? And everything is being digitized. So even money, our lives, our data, our habits, simply everything. And I believe in this session, we will have fruitful discussions, questions, and answers. So, if I may, I would like to first introduce our keynote speaker, who is founding president of Mobius Capital Partners, and he will be attending online. So we will have the video call, we will have the video, and then I will introduce our moderator, Mr. Mehmet Şükrü Tekbaş. He will be joining us. And then we have distinguished speakers here, Fadi Saab, Chairperson, CapitalFinance. And then we will have Ümit Cinali, ATA Technology Platforms. And then Assistant Professor Bora Erdamar, Director of Blockchain Istanbul Center. So I would like to invite our guests here at the stage, and then we will start with our keynote speaker. Thank you very much. Please. First floor is our distinguished guest, Mark Mobius, and then floor is yours, Mr. Mehmet Şükrü Tekbaş. Videoyu oynatabiliriz. Sorry for any inconveniences. Thank you for being patient.
Okay, good morning, Mark. This is Hakan Avdan from Istanbul, Turkey. It's nice to see you again. We know each other for a long time. And I'd like to welcome you to our 13th Bosphorus Summit. And in past, we had the honor and privilege of hosting you in Istanbul as our esteemed panelist. This year, you are again with us in Bosphorus Summit, but through a video reach. That's fine, though. We are hoping that next time we will be able to host you in Istanbul again, in next time.
Well, thank you very much.
Okay, welcome again. Thank you for joining us today. This year, our summit theme is the great transformation, driving forces of global change. Since you are one of the best investment managers of the world, having great experience in following new trends, I'd like to ask you some questions actually for our audience.
Sure.
And I would like to have your opinion in some fintech, developments in fintech, capital markets, financial markets, effects on developments in that industry, and how is it changing the world and the financial markets actually. and we need your good experience and good thoughts actually about this. I'd like to ask a couple questions, and my first question: the world is changing and evolving faster than ever, as we know that, due to technological innovation and extensive use of technology. But there are other factors also involving factors driving this change. For example, climate change, energy needs, food security, regional and international conflicts. What is your opinion, actually? What are the driving forces behind such change? Which factors are the most important ones, according to yourself?
Well, first of all, you've got to recognize that population growth generally is the driving force behind the demand for more and more resources in every direction, whether it be resources for power, whether it be resources for food, for any of these aspects, population growth is a very, very important factor. The world now has 8 billion people, and these people are growing. The number of babies born are growing, and that's having a big, big stress on the environment and on resources generally. So that's one overriding factor that we must keep in mind. Then, of course, there's the question of inflation, the question of higher prices, and of course, the cause of inflation is money supply. When you have the growth of money to the extent that we had during COVID, as you know, most governments around the world, starting with the US government, started issuing more and more currency. In the US, money supply went up by 40%. When you have this kind of growth in money supply, that means that the value of money declines and you have inflation. And that's why we're seeing high inflation, which, by the way, is underestimated by the CPI, the Consumer Price Index, because the Consumer Price Index does not measure everything and is not an accurate measure. So as I pointed out in my book, The Inflation Myth, you have to look at money supply, and we can expect much higher inflation. The other factor, which is very important, is the growth of cryptocurrency. No one really knows how much is out there in crypto coins. My estimate is that cryptocurrencies probably represent 2 to 3% of global money supply. That may not seem to be much, but the velocity of that money, that crypto, is very, very high. So money is being used, the crypto is being used as money to transfer billions of dollars around the world. And that's having a big impact, again, on inflation. So it's a very interesting phenomenon we're now witnessing. And in this kind of environment, in order to protect yourself, you must be ready to invest in good companies that have growing earnings and very strong balance sheets. In other words, no debt. So that's the general situation that I see.
Okay, thank you, Mark. You touched upon cryptocurrencies. I was planning to ask you the question later on, but let me first ask about that then. Cryptos are actually new instruments in the market. It's a kind of new fact in our markets. They have been long debated. Governments are trying to regulate cryptocurrency markets, cryptocurrencies, but it's like a new kid on the block, actually, cryptos. But how do you see their role? Okay, they are kind of money, medium of exchange. Do you really see them as a real money? Can they become a real money? And or they are just kind of another trading instruments like commodities? After the Fed and the central banks rate hikes, they started acting like commodities, actually, in terms of price movements. They are following commodity market price movements, but they are different. Obviously, they are not commodities. But what do you think their role in trading environment is? It could be money or just kind of speculative trading instrument.
Well, I think we have to differentiate between cryptocurrency and digitization of financial markets. We already have digitization to a great extent. And for example, if I go to buy something here in Dubai or in South Africa or wherever I am, I use Apple Pay or one of these digitized systems where I don't even have to pull out a credit card. I can just use my computer, my handheld, my iPhone to do the payment. So I think we have to differentiate very clearly between that and between crypto. Crypto is a kind of currency, but it's used for transfer of money from one place to another. So in other words, we don't need crypto for everyday shopping. It's not necessary because we already have a digitized system. But we need crypto to escape foreign exchange controls and controls by foreign governments to transfer money from one place to another. And we're witnessing that as the main use of cryptocurrencies at this time. So for example, here in Dubai, entire buildings are being bought with crypto. People are transferring money from anywhere in Africa, from Russia, or from anywhere in the world in millions of dollars in order to get the money out of those countries and into here in Dubai or some other places around the world. So that is going to be the real use of cryptocurrencies going forward.
Mm-hmm. Okay, I see. Actually, I share your idea, your thoughts. Actually, cryptos are used more like kind of hiding the real source of money or hiding some transactions. So that worries regulators mostly in all over the world, because as you said, I mean, billions of dollars are going one place to another without recognizing who owns what, actually. So this is kind of worrying. Obviously, but as you said, I mean, digitalization of money is different. We should definitely differentiate both of them. But it's again, people are trading cryptos in the market, millions of dollars made or lost. They are very volatile. So I think maybe we should. I always say investors or traders to be careful about investing in cryptocurrencies because of the volatility of the instrument, actually. So do you feel the same in terms of volatility?
Well, you have volatility in every form of investment, whether it be stocks, whether it be commodities, or whether it be crypto, or whether it be property, gold, whatever. There's always going to be volatility. Now, it's true that cryptocurrencies have had more volatility than perhaps other forms of money and forms of asset. But the bottom line is, as I mentioned, is the crypto use is more for transfer of money across borders. And when you're doing these transfers, you can set the prices while the transaction is taking place. So you don't have to worry too much about volatility, because you're talking about maybe hours or most a day when the transfer is completed and the currency from one country is transferred to another country. So that's the reason why, even with the tremendous volatility, you have people using crypto to a great extent.
Yeah. Okay, thank you. But now let's go back to fintech a bit, actually. I know you make investments, and your investment decisions based on fundamental research. And you collaborate with broker dealers, other asset managers, and everything. But on the other hand, new technologies are changing the markets, like investment instruments are changing, and also like algorithm trading, direct access to markets, and new innovations in fintech. Do new technologies ever change the way you conduct your business? Is development in fintech is going to change the financial markets? Is it changing the financial markets in development in fintech industries?
Of course, fintech has had a big impact on financial markets, mainly because they speed things up and they lower costs. So in the past, when you had to use, let's say, a credit card, the cost of transaction was higher than when you're using digital money. In other words, when you're using something like Apple Pay or any of these other forms. So it's no question that FinTech has done two things. One, it has made transactions faster, easier, and also at a lower cost. And of course, that's had a big impact on banking. Banks have successfully used FinTech to lower their costs and therefore pass on those lower costs to their clients. In addition, FinTech has opened up new avenues of payment for people who don't have bank accounts. You must remember that many people around the world do not have bank accounts, but yet are able to use transactions using FinTech. And the best example of that perhaps is in Kenya, where you have this transfer of money being made by people who don't have bank accounts.
Yeah, you're right. In terms of transferring money or receiving money, like payment systems are getting more and more important for unbankable people, unbanked people, especially in Africa or Southeast Asia, mostly, as far as I know. But how about investment business, like financial markets, capital markets? Do you see their involvement? It's increasing in fintech companies, because fintech companies are also investments made by small venture capitals as well, like Nasdaq companies. There are a lot of investments in fintech industries. I think it's a kind of new trend in the United States as well. Do you see more money will be pouring in fintech business?
Yes, you've seen new fintech companies come into the market, companies that are offering new services. And yes, that's definitely something that you've seen. And of course, banks themselves have competed with these fintech companies or even adopted fintech companies in order to make their operations more efficient. So yeah, there's been a number of fintech initiatives. Some of them have failed, some of them are successful. So just like any of the new technology, there are winners and losers in this field.
Okay, thank you very much, Mark. Those are my questions, actually. Would you like to add anything else in this regard, regarding this topic?
Well, I just wanted to wish everyone at the Bosphorus conference lots of success, and I hope your investments go well. We have wonderful opportunities around the world now, so all the best.
Okay, thank you very much for joining us again. All the best from us too, as well. Have a good day. Thank you.
Thank you. Bye-bye.
Bye-bye.
Okay, we thank Mark Mobius and Hakan Avdan for this nice conversation. Ladies and gentlemen, we have 45 minutes on this panel. As Mark Mobius mentioned, the driving forces behind the great transformation, which is our topic for 2 days, are population, the growth of population, the age, we may add knowledge and transfer of knowledge, and we can add several other issues to this topic. We will be starting with Mr. Saab, and he will talk about fintech or new technology in finance. Each of the panelists will about 10 to 12 minutes, and we will allow some time for questions and answers, and for some discussion. The floor is yours, Mr. Saab.
Thank you, Professor. Good afternoon, everybody. Let me start by expressing my pleasure and honored to be amongst a panel of specialists speaking about the topic that today is taking a lot of attention, because it's an easy concept when we talk financial services, fintechs, with technology, but yet it's a difficult on the practical side to see it in action. So let me start with a definition of what the World Bank and IMF have stated for fintech, where they say fintech are advances in technology that have the potential to transform the provision of financial services, spurring the development of new business models, applications, processes, and products. The adoption of fintech was accelerated globally by core policy objectives that provide solid foundations for the digital economy to flourish, such as financial stability, integrity, inclusion, efficiency, innovative, consumer and investor protection, data privacy, enhanced competition, and those were most recently propelled a lot by the pandemic of the COVID-19. So fintech actually democratizes the economy by making financial and banking services more transparent and easily accessible, with faster, more efficient transactions, and of course, cheaper, as we just heard. Fintech solutions, blockchain, RegTech, include tools for peer-to-peer lending, digital wallets, mobile banking applications, applications for e-payments, foreign exchange transactions, stock market research and investments, startup crowdfunding, and many others. The total value of fintech investments worldwide rose from under 10 billion prior to the year 2015 to 215 billion in 2019. Now, it declined a little bit. It was only 122 billion in 2020, but the first half of 2021 was already at about 100 billion. So today we are facing buzzwords. We all hear about them. DeFi, decentralized finance, blockchain technologies, cryptocurrencies, bitcoins, Litecoins, EOS, Ethereum, XPR, XRPs, Tron, and many others. We have personal financial budgeting tools such as PocketGuard and DoItMit. We have stock trading apps such as Robinhood. We have payment and international transfers using Stripe, Klarna, Skrill, PayPal, Dwolla, crowdfunding platforms such as GoFundMe and Kickstarter, popular messengers and communicating applications that facilitate digital banking that we all use today, like Telegram, Fiverr, WhatsApp, Signal, Zoom, Microsoft Teams, and many others. But here, let's pause a little bit, and let me remind you all, when we were young, when we were 10 years old, 12 years old, we created our own alternative finance. So when we were kids, we used to play games, and we had our own currency. And this currency was maybe marble balls, DB, that we played with, or collection cards, Pokemon cards, or some sort of color stones. And this is how we transacted. And we became rich if we collected more of them, and we became poor once we lost them to games. That's alternative finance. Also, when we were watching spy movies, if you remember, many years ago, I have a lot of white hair, we used to see spy movies where the villain would have heads of state in hostage and will ask for hundreds of millions of dollars in ransom, and they will accept, and there was automatic payments. So on the screen, we used to see $10 million coming from here, 30 million from there, with automatic payment, and his sidekick would say, confirmed, we received the money into the bank. We used to see face recognition tools where he will take some sort of a camera and then they would recognize who's speaking. All of these today are reality. So it shows you the fast pace that things have been moving in the field of technology. And this is the major driver behind fintech, is the technology and the artificial intelligence and the machine learning and the Internet of Things that have enabled us to be able to create products to face competition barriers to entry. So if I'm today, I want to be in the financial services and I see the big banks with all the fantastic muscle, financial muscle, capital, human capital muscle, how can I compete with them? I have to look of ways, and fintech allowed me to do so. So competition was a major driver. Demand, there's a lot of demand of people, users who were seeking practical ease of use, improved quality. They were a major driver for fintech solutions. The force majeure, COVID-19, had forced us to rely a lot on reacting to crisis and to adverse economic situations, and rely more and more on fintech. And then there's an ecosystem, a supply. So if you supply products, people demand them. And the more you had players who enter the market, the more you had users who use them. So today, we have all changed our banking habits, and there's a big fight between fintech service providers and traditional banks, whether they complement each other, compete with each other. I will not judge it myself, but I'll I'll answer your questions if we have afterwards. But however, they have a role, and the major providers today and the promoters of fintech and digitalization is the central bank, because central banks today are getting into digital currencies. So once you have a central bank pushing a digital currency, then it becomes a core part of the payment system. Policymakers, supervisory and regulatory authorities have given digital banking license and allowed crypto assets where you can leverage an asset, borrow on it, and use it as a real collateral. Telecom companies and e-money service providers who have enabled the ease of use of those phones to do all of the banking transactions. And then we have a lot of what we call non-bank FIs, non-bank financial institutions, who have spurred up. And I'll give you an example of one of my companies. So I have a company in the UK, and I wanted to open a bank account in Qatar. So I go to my bank in Qatar, and I tell them, these are my UK papers. And they say, no, please go and get us articles of incorporation, shareholder agreement, signature cards, etc. Or they have to be apostolate, so a notary public has to oversign them. You take them to the Ministry of Interior in the UK. They approve the notary public, and then you take them to the Foreign Ministry. They approve the signatory of the ministry, and then you take them to the Embassy of Qatar. And then you come here and you take them to the Ministry of Foreign Services, and they approve everything, and then we open the account for you. So I went to one of the digital banks, and I applied online, and I gave them my company's name and the registration number. In less than 24 hours, actually it was maybe 12, 14 hours, I got my bank account open. I got a corporate bank account open. They went into the UK company's house. They pulled all the information on my company. They checked with the signatory. They only asked me to provide my ID and the picture, and they confirmed everything. And I use today the company bank through one of the digital banks. So can you imagine how this changes banking in the world? And then another promoter is, of course, the cybersecurity companies, because now cybersecurity is becoming more and more important, and you have a lot of companies that help you identify theft, protect data, etc. So you feel more comfortable using fintech products. What are they? The 5 products moving forward, and I will finish my statement with this, are of course the mobile applications. We will see more and more mobile applications. The phone that we have in our hands is no longer only a telephone, and it's no longer only a computer. It's your bank. It's your private bank that you can do everything on it. And one of the things you can do on other products becoming more for investors are portfolio management. So today you have applications that enable you to open portfolios to buy and sell stocks. You just put parameters and they will buy the market index portfolios for you, and you have an AI-assisted robot who will decide what stocks to buy, and you can, through the phone, follow what's happening. A third product that we will see more and more from is our cloud-based infrastructures. So we'll see now more connectivity, more data storage, larger data computations, all through the cloud. So we don't care a lot about how much memory we have or where do we store the data. It's all up there. It's accessible from wherever we are in the world. The fourth product that's going to be, again, moving forward, mainstream products are the Bitcoins and the FTEs and the tokens, the smart coins. All of these that today we're afraid of are going to be mainstream, I think. And they're going to be representing much more than 2% of the world transactions. And the last product that is very important are marketplaces. Marketplaces are when we have platforms, digital platforms, that enable you to do things that otherwise would have taken a lot of capital injection, a lot of infrastructures. So you can have an Amazon of financial services, where you can go and buy all kinds of products and compare what do they do, what are the prices, etc. You have crowdfunding. When you have a startup today going to raise capital, they can raise capital much easier. They don't need to go anymore and see a venture capitalist and do all the kind of investment banking relationships they used to have in the past. And then you have products like a company that I have that does matchmaking. So an SME will go on the platform. We do due diligence on it. We do KYC documents. We help them structure the requirements. They put a requirement, so we're looking to get a loan facility for this period to do this activity. And then we have, on the other hand, banks and non-bank FIs who come in and say, we're willing to fund companies using this criteria. And then we matchmake them. So we present the bank with a credit committee ready file, and we present the customer with letters of term sheets from banks on which basis they will fund them. The beauty of this, it's worldwide. So you can have a company that is in Bangladesh being funded by a bank in Brussels. They don't know each other. There's no relationship in the past. It's all done through artificial intelligence. So moving forward, I think the digitalization of money and fintech is going to be mainstream, and we have to, quickly jump on board, embrace those, not be afraid of them, and move forward. Thank you very much.
Thank you, Mr. Saab. You talked about the need for fintech, and you gave examples of application areas of fintech with your own experience. Now, Ümit Bey, you are representing a large group in Turkey, ATA Group, and the group has great interest in technology. How do you see fintech, and how do you use fintech within your company? Can you give us some examples from your own experience?
Thank you, Chair. Before I start, I want to differentiate between two things. One is we use the words digitization and digital transformation sometimes interchangeably. Digitization to us is about taking away the labor or the simplifying the processes and making them more efficiently and faster through digital means, whereas digital transformation is about creating new business models, a way of doing things differently, such as Airbnb or Uber. Those are transformational items. So I wanted to, before I start getting into a little bit deeper into technologies, I want to give a little flavor also about ATA Group. It is a fairly significant large group with presence in 10 countries. And as you can see, we're predominantly into food businesses and as well retail, as well as in finance. We have our start many years ago in ATA Group in finance. And as you see in the right upper corner, I put in our recent a fund that does robotics and AI being introduced by NASDAQ in the States. So many areas within this ecosystem, fintech and as well as technology touches everything. I always thought that it was limited to the finance area, but now it's touching everything. So what does ATP does in this area? We are, by the way, a global company with a presence in China and surrounding 5 countries. We have entities in Europe and China. Tracesoft does software services for brokerage firms, portfolio management, fund management companies in Turkey. It has a decent market share. It's the leading product in the markets. Whereas Xenia is our software products for QSR, quick service restaurants, where we manage the thousands. We have managed about right now 3,000 restaurants worldwide. And it includes anything from taking orders online or at the restaurant, whatever systems as far as payments are concerned, digital or to cash. For example, it's fascinating that in China, if you were to want to pay in cash, they may not have the change for you. They may have to look for about 10, 15 minutes for the change. We are assuming that the rest of the world is going to go in that area as well. It's a function of time. We also have GSAEO is in the lower right-hand corner. We have a venture fund as well. We are investing in technology companies and most of them are in payment systems and the like to help us to satisfy this large ecosystem as well as the markets that we serve, basically. I've kind of summarized a few minutes ago, you mentioned about the marbles, by the way. Marbles, you were bartering, I think, your marbles. That was the system. And then once the gold came into play, of course, these are all centralized systems that were regulated. And the banks, as you know, from the 50s and 60s on, were using digital means, but in their own offices, in their back offices. So we're talking about banking, but currently right now, there's quite a few population still unbanked that needs to be reached with easier means. They find the classical, traditional banking systems as either expensive or they may have some trust issues as well. It's most about the monies that is required to enter the systems. So it needs lower barriers of entry. Then, as you know, we get into the cards. Cards required a network, but the networks were point-to-point. So your POS device was connected to a central area, and it had the communications that way. Then we moved into, as you know, into the electronic age in the late 80s, and the 90s gathered momentum. It's about the internet. So now we had a network that we could connect to anywhere. And so basically, when you look at it, right now there are billions of phones. It's fascinating that I think 83% of the world has smartphones, adults in the world. And that rate is going to go up to about 7.7 billion by 2027. Now we do have a means in our hand, actually, to communicate. So this is all the things that we're discussing right now is enabled by that little device. But that little device is fascinating. I always get a kick out of talking about this, by the way. That device that anyone holds in their hands for a few $100s right now is about 100 times more powerful than the Apollo 11 computer, which would have cost about $1.5 million per module today. So we have phenomenal computing power in our hands. And what is needed also was a way to communicate. I don't know, I look around and some of you do recall, I assume, the first cell phones, these giant cell phones that we had. They had no storage, by the way. You could only talk to them. Now we have phenomenal storage, phenomenal processing power. Anything is possible. Now with the 5G network, I mean, we're talking about lots of different ways of doing things. And communicating through the air with very little latency is going to open up new things in the financial markets as well. We're going to be able to trade very quickly and the like. So, you know, it's all about the network. It's all about the computing power we have in our hand that's enabling us. And then average home, by the way, in the world right now is connected at 31 megabits. In countries like Luxembourg, about 200 megabits at the home. So that allows you also lots of options to trade and to connect, to get education and the like. And but my summary about technology, I don't take it that seriously because I think it's commoditized. I think everyone needs to stop thinking about technology and think about their business models. Anything is possible. Computing is cheap. It's getting cheaper all the time. And the reality is, you know, Moore's law, you probably heard it. It says Moore's law that was established in 65 and modified in 75 said every 18 months, computing power will double. It no longer holds true because we cannot double it anymore. We reach the limits of silicon. Electrons don't fit into the paths of, you know, they don't fit anymore. It's too dense. So what's needed right now is quantum computing. From the quantum mechanics. It's the Newell's law. It's the Newell, by the way, Helmut Newell is a scientist at Google. And his law also says that it's going to double again at the 2 to the power of n, much faster, but using quantum mechanics and processing power. That's coming up. And talking about currencies, I think cryptocurrency, we're going to talk about that as well. It's about a 1.4 trillion market right now. A few minutes ago, someone mentioned about the share of that market in the world right now. It is growing. It has some challenges right now. It's about energy. It consumes 0.5% of the world's energy. So it's about, we're talking about going green to become panels and to support that. And the other thing is also with the prices coming down, at the break-even point about $7,000 to $9,000 for a coin. But that's not bad news, by the way. There are many people that can do this efficiently, so it's going to be a shakeout in the market with the best players surviving and thriving later on. So if I were to summarize this, bottom line is technology is not it. It's all about the business ideas and how we can do them. But when you look at what's real here, some people call it the gold, new gold. New gold is data. It's all about getting the data, and I've kind of put on that, by the way, in that slide, what it used to be, and it's what's becoming. So it's all about, we are generating data, and once we get to analyze having this huge computing power and take this data and able to put AI, and with AI, artificial intelligence, to be able to analyze this huge data that a human is not able to do, first of all. And as we get the cheaper computing power, we are able to crunch through this data. And what this data will allow us to do is also things that we did not capture before, we'll be able to capture. We can recognize, we can personalize things, we can recognize our customers. We can basically present things that are very suitable to them. So tremendous amount of opportunities for the business mind. What can we do? And the one last slide I put in is basically, I thought these are things, I hope you can read it because I wrote quite a bit of things there. And basically, these are all things that there are many more, by the way, that all technologies do touch and allow. I mean, diversified finance, for example, is a vision, but it needs an infrastructure and a technology around to be able to do that. Someone, I think Mr. Saab mentioned about, having the clouds as a service. You don't have to build it yourself anymore, by the way. Many people can take ready things and put in their business mind to it and transform their business without having to invest in the infrastructure or the solutions. As a matter of fact, it's the pay-as-you-go models. So acquisition of technologies are becoming very inexpensive. You can reach them very quickly. So think of your solution, talk to the right people, and you can implement your solutions very quickly, because all what's needed for secure transactions are getting there, basically. And the other thing is virtual and augmented reality. I mean, Meta right now is somewhat academic as we get into it. It's this emphasis stages, but there's going to be new economies, new rules that are going to come with Meta. Things that we can't imagine right now. It's a different way of doing business. And in all this fintech trends, by the way, there's one factor, of course, and that's regulation. There's regulation, and maybe sometimes resistance to change can be a factor as well. But I think we need to get ready for that. I mentioned about a little bit RPA, robotics, but robotics tend to be more about digitization, not transformation, as far as I'm concerned. And the items keep, there are so many more items that I've listed there. What's underneath them is basically either blockchain technologies that are, that are able to transfer information, because, not only we're looking into, of course, the transfer of information, but we're also looking at sensors. Just one example, then I can finish my section. For example, an insurance company charges for a container a certain amount of money while it's being transported, but its risks in the water is different than its risks on land. So if I have a little sensor that tells me when it's in water, when it's on land, I can price it that way so that I can now create new savings and manage their risk. Just a simple example, we can do with having sensors and IoT devices and track those things and relate them to our businesses. So that's my bit for now. So it's just to give you a flavor of what's possible.
Okay. Thank you, Mr. Cinali. You summarized the evolution of money. You gave the importance, you mentioned the importance of data and the need for data transfer, and later you touched upon the trends of fintech and mentioning DeFi as well. We will come later to some questions and you will be given your answers, but now let us turn to Mr. Bora Erdamar. He is the chairman of, or the director of blockchain at Bahçeşehir University, and he is an expert on cryptocurrencies. The floor is yours, Bora Bey.
Many thanks, and hi to everyone. Well, I would like to talk about cryptocurrencies in a context, because I think one of the main reasons why still many people are very interested in cryptocurrencies, but they don't get it, is they don't probably get the context. So because of which reasons we are talking this much about cryptocurrencies and digitalization of finance. So, and recently this week, probably you heard about lots of new headlines throughout some cryptocurrencies. Yes? Louder? Okay, thank you. Sorry. Well, I have a presentation, by the way, so if it can be uploaded, it will be helpful. If not, not a big deal. So the keyword that I want you to focus on is this, decentralization. Well, this is a popular word, but again, a context is missing in this. And for that reason, I would like to invite you to think of two dimensions of this. First of all, decentralization of finance and decentralization of databases. Without understanding those, we cannot actually put these things into a context. So all of the speakers discussed about the market structure or about the motivations of digitalization of finance, financial technologies. So let me provide you some statistics now. So this is one of the main reasons. The number is even not very updated, but even 5 years ago, the actual number of unbanked population of the world is 1.7 billion. So this is a huge number. On the other hand, this is, I think, another more striking, even more striking example. About 2/3 of this unbanked population, and this is adult population, so the younger people, younger than 18 years old are not included. So they have mobile phones, they have smartphones. So these two pictures tell us that the world is digitalized faster than banked. So there are, of course, lots of reasons for that. Some of them are bureaucratical, some of them are financial. But long story short, also consider the new generations, Z generation, younger people, our children. So they are born to digital world. Majority of this audience is actually, I will describe ourselves as refugees to digitalized world, right? We aren't born with internet, majority of the audience here. So once they join to the financial system, they have all of the fundamentals of digital technologies already. And another reason why we talk too much about the financial aspects of cryptocurrencies are these two forthcoming statistics. So these are the comparison of Bitcoin with the top firms of the world. So, and once we check that, actually we see that Bitcoin has now, according to its market cap, ranked 25, meaning that it is like the 25th largest company of the world. And it all started just at 2008. So at this point, I would like to make a clear distinction between Bitcoin and other cryptocurrencies. And the phrase should be like this: Bitcoin and others. Because soon we will see that now there are more than 25,000 cryptocurrencies, and they are actually essentially very different than Bitcoin. The definition of Bitcoin is hidden in its title. It is a peer-to-peer digital cash system, okay? So on the other hand, for example, Ethereum, the second biggest cryptocurrency right now, it is a platform. It is not trying to replace money or any other financial instrument. It is trying to innovate, and it is trying to transform the whole financial system that we will see very soon. So this is also hidden in its title. So Bitcoin is a peer-to-peer digital cash system. On the other hand, Ethereum is a platform of decentralized applications. So at this moment, very briefly talk about decentralization. Our monetary system is by definition centralized. Central banks, as also name suggests, are the only authorities for printing fiat money, right? Producing fiat money. So here, Bitcoin revolutionized for the first time for the humanity the supply mechanism of money, or supply mechanism of financial system in general. Because maybe here I can ask one simple question. If you have ever bought or sold Bitcoin, can you raise your hands? Okay. If you ever produced, in technical terms, mined Bitcoin, can you raise your hands? So this is actually the main point of all the discussion. Actually, you can. If you print dollar, or if you print any fiat currency, then you will be in jail. But if you can produce Bitcoin, is it a money? Is it another financial instrument? Is a very important topic as well. So also let's clarify that. All of the cryptocurrencies are programmable financial assets. This is important because, for example, through Ethereum protocol, you can also program like NFTs, which are now tokenizing all of the art objects or any other securities. So if Bitcoin is a money or not is a kind of wrong question, because cryptocurrencies are by design can be programmed according to the needs. That's why we have security tokens, we have utility tokens, we have coins like trying to replace fiat currencies. They are stable coins and they are actually pegged to the associated fiat money. So this is today's rough picture. Of course, many people are just focused on the prices and the volatilities of the currencies. I would like to invite you to focus on the evolution and the rapid evolution of the whole ecosystem. So all the things just started in 2008. Ethereum is just like 7 years old. And now we will see, actually, we are observing in the headlines lots of things going on between the traditional financial markets and also the new ones, especially fintech companies. And the blockchain is just the database part of it. So if you remember, we were thinking about 2 dimensions of decentralization. Decentralization of finance, which is for us equivalent to decentralization of the money supply. For cryptocurrencies, by definition, anyone can be a producer of that currency, and everything is based on coding, and ideally they are open source and they can be monitored. On the other hand, now the forthcoming 4 slides will actually show us what is going on and what will be the near future. The near future will be a kind of competition between the firms. Now they can also produce their own, as I say, digital currencies because they are centralized. And from now on, I will distinguish between the centralized digital currencies, I will call them as digital currencies, and cryptocurrencies, which are by definition decentralized in terms of their monetary supply, in terms of their databases, which records all of those financial transactions. So 4 years ago, this map was just within one color. There were no even pilot projects for digital currencies. So one of the main themes that should be followed very closely for anyone and for any firm, bank, or any other third parties is this map. Because now central banks are trying to produce digital currencies based on different motivations. Number one motivation is inspired by cryptocurrencies. So by definition, we have, as a state, as a government, we have different needs, different use cases for money and financial instruments. Thanks to blockchain technology, now we can program it, but by definition, let's produce it again centralized way. So those will constitute digital currencies, and use cases of digital currencies for banks, for central banks, and for societies is a standalone research topic and a business issue. On the other hand, now we have firms, and for the first time, as I have mentioned, all of the monopolistic firms, now they are not surprisingly investing on digital payment systems. Even Libra Association, with the leadership of Facebook, they have tried to declare their own digital currency. Libra was the first name, then there were lots of reactions. Mark Zuckerberg was invited to US Senate to actually explain what are you doing there, and that project is kind of first cancelled or postponed with a new name of DM now. It's ongoing, but with a slow pace. But I would like you to invite to focus on the trends now. On one hand, we have cryptocurrencies. On another hand, all of the monopolistic firms, giant technology companies are now have an opportunity to produce their own digital currencies. And also we have centralized exchanges. Today's hot topic, actually this week's hot topic, is probably you have heard about those two biggest centralized exchanges, which are by definition the service providers for buying and selling cryptocurrencies. They had a kind of competition to be the number one, to be the biggest one actually. Number one was Binance, number 2 or 3 was FTX, which is based on USA. Binance is, although not based on any specific location, the owner, the CEO, CZ, is Chinese. So, of course, this story, this mechanism has some kind of political issues behind the scene as well. And recently, first of all, Binance announced that they will buy FTX, and then the situation was realized that FTX is in so, how to say that, in a difficulty position that probably they will declare bankruptcy. So there are lots of drama going on based on centralized exchanges as well. But please don't confuse here what's going behind the business part with what's going on behind the cryptocurrencies. So decentralization was about the money supply and about the databases. Here, these two firms are by definition centralized. So there are lots of problems where some firms, some authorities are trying to take part the new role of central authorities in the crypto ecosystem. And to also understand the evolution of the technologies based on Ethereum, now we have decentralized finance protocols. And they have a very strong motto. They say that we are not interested in replacing money. I'm finishing in like 2 minutes. We are not only analyzed or interested in transformation of money. We are transforming financial system. And they have a strong motto. They say that banking systems, banking services are very essential, but banks may be not. So because we can replace lots of stuff with code, and for them the motto is code is love. So this is the final slide. So within just 2.5 years, the total value locked in DeFi protocols, these are not firms, these are not exchanges, these are decentralized protocols, including decentralized exchanges. And you see the rapid growth, which actually shows the trust of people who safely save their assets in these protocols, in these programs. So many thanks for listening. So hopefully it will be a bit helpful for everyone to put things in a context in terms of the decentralization criteria. Thank you.
Bora, thank you very much. You covered very interesting topics in a short time. I'm sure there are many questions. We will take some questions, but let me ask you first, how do you see, is cryptocurrency a security or a commodity? There is a long debate on this issue. What is your answer? And then, how do you see the regulation or supervision of cryptocurrencies?
Let me start from the later question, very briefly. So the regulations are around the world, of course, going on with a rapid movement, because for a while, all of the regulatory authorities had a difficulty to answer exactly the same question that you have asked. So what are these? What are the definitions? Without having a proper definition, even the associated regulatory body cannot be defined, right? Because if it is a security, then SEC should be the main authority. Or if it is a commodity, then the other institutions should be responsible. Well, the answer is a bit, I would say, not pleasant. It is so diverse. And actually, I had made the definition. So cryptocurrencies are programmable financial assets. So some of them are programmed to be securities. Some of them are programmed to be like commodities. And some of them are programmed and used as money, especially the stable coins. So they are medium of exchange, they are store of value, they are unit of account. So the short answer is they are the ones as you program it. And the difficulty comes to the picture now because we have more than 20,000 cryptocurrencies. So even categorizing them, putting them into the proper basket is an issue. That's why those regulations are actually lasting for a while. But probably, I mean, now, especially from Europe, we have MiCA. Now from USA side, we have some regulations about first stable coins, with the forthcoming months about cryptocurrencies. Within 2 years, we will have the regulations probably.
Okay, from the audience, we will get 2 questions. One question, please, yes. First tell us who you are and then raise your question. Önde.
Once again, good evening. I'm Ibrahim Bello.
Louder, please.
Okay. I'm Ibrahim Bello, Director of Planning and Policy Coordination in the Federal Ministry of Agriculture and Rural Development in Nigeria. Sir, I wanted to add more based on your question. Is that a legal tender? Because it's just like a secret society. Only some groups here and there using it presently. Thank you.
Did you get the question? Is it a legal tender?
Is it
That
a
was
legal
the question.
tender?
Okay.
Is it a legal tender to
That is the
produce
question.
cryptocurrency? Is the question.
Yes.
Okay. So for majority of the countries, I have shown you a map for digital currency production, right? So for majority of the countries, so it is in the gray zone, meaning that there is no any binding legal thing which forbids production of cryptocurrencies, except 9 countries. In 9 countries, you cannot, it is illegal to produce or to mine Bitcoin. The number actually is dynamic, it changes from year to year. On the other hand, for example, for Turkey, there is nothing about legality. So you can be a miner, you can produce Bitcoin and also other cryptocurrencies. In the forthcoming regulations for the European side, actually it will be defined as a new kind of production activity, and there will be taxation, meaning that based on your mining activities and based on the revenue coming from there, there will be a tax, meaning that it will be also defined as legal.
Thank you. There was another question on the last row.
I'm Wise Bondankwa. My question is this. With the governments trying to introduce digital currencies, what we realize is that most of the governments try to put policies in place to prevent the public from using other cryptocurrency platforms. What do you think? Would you encourage governments to introduce digital currencies and also put in laws to prevent the public from using other cryptocurrency platforms? Thank you.
So the regulations can be done through the central figures for this decentralized system. So this is the generic answer. So let me specify. So blockchain technology is, with a kind of analogy, it resembles the internet. So it is like a network technology. So you cannot regulate the technology. You should and you can, or you can and you should regulate the technology providers, because they have the power and they have the responsibility to protect the customers if they are using, or investors if they are using their own platform. But that's why I try to make a distinction between decentralized finance, where every individual, every user, every firm connect to this technology, network technology, by their own wallet structures, for example. They use some software, they use some programs, and they are responsible for their own assets. But this is a technical and a bit complicated procedure. That's why there are lots of service providers for buying and selling cryptocurrencies, service providers for custody, service providers for monitoring the program that is used by those firms. All of those firms, all of those central entities, they are actually very helpful for the evolution of the ecosystem to make these things popular, but at the same time they are the origin of the risk, as we have also witnessed this week. So apparently FTX, one of the largest, biggest centralized exchanges, they didn't have the proper financial risk management, and since there were no monitoring, since there were no any legal issues, now it couldn't be monitored and it was too late already. So, but it is, I think, very important. The problems are nothing about the monetary supply of Bitcoin or other cryptocurrencies, but about the service providers, or about the bridges between the investors, between the other firms and this decentralized technology.
Thank you very much. We thank to the panelists and at the same time the audience being here with us and asking your questions. Thank you again.
Thank you very much. We're going to be moving on the next session. And on behalf of course, International Cooperation Platform, I will be just giving a small present for you, actually. And it's very environmental friendly. Unfortunately, but plans. So, of course, we will not have a break. We will directly moving on to the next session. So, Professor, please. We will be planting a tree, actually, on behalf of you. Thank you very much.